simply because like those are the guys that pay like they're in the highest fee tiers. They like pay a lot of fees, and for us, it's basically the best flow we can possibly have on screen. Basically, it's what's called uninformed flow. People just buy, sell, run. Well, how we perceive it randomly, basically, and they don't really push the prices up or down. So they are like the best flow we can possibly have. Like we want retail to stay not broke as much as possible. We don't really want retail to die. But yeah, unfortunately, like for the past, like we were in December, January, February, like there were so many of those cascading liquidations that retail is flushed out. Like January was a good month for us trading wise. February, March, and April were not so good months for us trading wise because it's just not much happening. Like everyone is sidelines basically.
So when retail activity dies down, that's when market making is less attractive. And right now, you're saying you're not seeing a lot of retail flow going through all your venues.
And it's not even linear. So it's if volume goes down 50%, we don't make 50% less. We make way less than 50% less.
Right. Because of the fact that retail is totally gone and vast majority of flow is informed flow. So okay, one question I've always had about market making in most assets classes. So if you're trading stocks or bonds or whatever, prices for retail it's mean reverting, right? So there's a fundamental value to the asset, and it'll most likely go back to what the true value of the asset is after retail trades it. Whereas crypto prices are kind of path dependent, and they're very momentum driven, and they're sort of autocorrelated. Something that goes up tends to keep going up, something that goes down tends to keep going down. Wouldn't that make market making against retail harder, given that these things are likely to keep moving in the same direction that retail's pushing it?
Not really. Like ultimately, our model is we have a bunch of trading venues. We have Binance and Coinbase and DeFi, and we have some OTC flow. Like we sell on one and we buy another one cheaper, and we just do millions of those transactions every day. So trending from that perspective is not that bad. Like what's bad if big liquid funds, of which we don't have that many, comes and starts buying some token, and they can push the price really against us, and it's really hard to basically hedge in time. So we'll just get run over. So that happens, and that's actually like the other side of token market making, that like people saying, okay, you guys are making a killing on those call options. We get run over on many times on illiquid tokens that we have obligation to market make. And it's not a lucrative business in a bear market at all.
At Strive.cc, our AI agent keeps finding amazing projects for you to invest in. Every day we have projects to do 10x, 20x. So join our free Telegram and enjoy. At Strive.cc, our AI agent keeps finding amazing projects for you to invest in. Every day we have projects to do 10x, 20x. So join our free Telegram and enjoy.